Good evening, Stephen Berg here with the Century 21 Executives Berg Homes team. So over the Christmas period, I was approached by lots of people saying, Steve, what the heck went on in 2022 in real estate and what do you think is going to happen in 23? So in having all those conversations, I thought I should put together a quick presentation for you all. And here it is. That's me in the top corner. I'll try to stay out of the way. So I've broken it down into 4 quarters because really it was 4 pretty unique quarters. Well, 2 unique quarters and then two that were more similar. But the first one was like no other in the year and like no other I have ever seen before in 30 years been licensed in real estate here anyway. I've heard of it in Vancouver. Super crazy market. Now the thing that people thought though was there was tons and tons and tons of homes selling because they didn't see any for sale signs anywhere and nothing but sold signs. The truth is, sales were actually down about 22% from the year before. It was just a matter of the crazy low inventory, which was actually a little bit higher than the year before, but much increased demand and an even higher percentage of people coming from the coast. So you can imagine in some of those early months when we had close to 50% out of town buyers, what an effect that is having. Because if you live in Kelowna and you sell a house and then you go and buy one in West Kelowna, it's kind of equal for the entire area. But when you've got so many people coming in from outside, not selling anything, but taking inventory out of the market, it creates a frenzy. And as it says right there on the slide, we had up to 50 offers on properties. I actually heard of properties with more than 50 offers. And there was some absolutely incredible scenes that we witnessed earlier this year. Selling prices averaged 27,000 over asking in February, which I've never seen before here either. I've seen homes sell over asking price, of course, but not just on average. That was the new norm. It was absolutely nutty. In the second quarter, of course, the interest rate hikes started to kick in. They started off slow with 0.5% rises and worked their way up. But I will say it might have had an effect on sales as consumer confidence was down. In fact, normally we see from the first quarter to the second quarter a growth in sales, just because the sun's out. People with homes with pools and etc. bring them onto the market. And so we'll see a good jump in sales in the second quarter. Last year it was 27%. This year we were down 40%. So it was down 7%. So it was a huge down drop when you think of the normal percentages. So we've had 27 and 40% rises in the last few years, and all of a sudden we're going down. That didn't affect pricing too much. The average was still 10,000 below asking, which is a great average. And in many areas around me, still in June, there was homes going for $200,000, $300,000 over asking. But we could see things were definitely cooling down. In the third quarter, we got into this kind of standoff, and this is normal because in a seller's market, you'll find that sellers are pricing ahead and buyers are looking back at the past sales saying, hey, this is fair. And the sellers are saying, no. The market's on the move. It's the exact opposite in a buyer's market. In a transitional market, you've got buyers looking both ways, buyers and sellers, looking both ways. And it creates this kind of standoff. And what happened was, in some cases, the sellers won and still got their premium price. In some cases, the buyers won and worked them down because inventory was growing all the time. Another trend we saw in the third quarter that we hadn't seen for a while was listings expiring. And by that, I mean it ran its 3-6 months, whatever the length of the listing was, and then couldn't sell and just dropped off the market. So expired listings were up 300% over the year before. So that's a pretty big jump. What it meant was that you could no longer list a house at any price, and eventually it would sell. We saw the market catching up to most homes in the spring, but that was now over. October, November, December, we kind of settled into a new normal. Um, Most of the pricing decreases off of the absolute crazy peak had already happened, and we saw some stability. Now, that was somewhat skewed by the fact that the high end was still going pretty well. High end homes were selling almost as well at the back of the year, maybe as well as they were at the front end of the year. They didn't experience the massive spikes in price over the last few years. They've gone up, but not by the same percentage. And so since the high ends were still selling as a percentage, they were a much higher percentage of overall sales. That brought pricing up. We were also looking at pricing compared to 2021, not pricing compared to January, February, March. So we are going to see that pricing looking like it's dropped off in the next few months. These two charts here give you a good look at what I was telling you about. You can see inventory was super low at the beginning of 2021, then started to climb and then dropped off again right around the end of the year, beginning of 2022, and this is where the madness happened all around here. Now we've got 12 months worth of inventory on hand. We were down to 2.5 months at some points over the last few years. So we're now technically in a buyer's market, although I'll speak to that in a second. Over on the other side here, we've got an interesting chart too. As you can see, back in February of 2022, we were just $7,000 below original asking price properties were selling for. Now, I know what you're thinking. Hey, Steve, you just said properties were selling for 27,000 over asking. This is the original asking price before it got reduced or relisted. So it gives you an idea of what people were originally asking versus what they got in the end. Because even back at the beginning of this year, some people were like asking absolutely higher than crazy numbers. Once they dropped it to crazy, it sold. But now we're looking at in December, we were $138,000 below original asking price. So that's people listing, looking for a premium price based upon what the neighbors sold for in the spring, and eventually either getting beat down in a negotiation or realizing that things have changed and resetting. So the thing that people don't realize there, though, is those guys who are selling for 138,000 less could have sold for more if they were bang on the current market right now, considerably more. So it's something to think about if you're selling. Make sure you get proper pricing based upon today's data and an honest assessment. Otherwise, you may end up losing an awful lot of money as things start to cool. So the last question was, what's going to happen in 2023? Well, interest rates are not coming down, and from everything I can see, they're probably going to be tweaked up a little bit more in the short term. Consumer confidence is low, and that's not going to be going up either in the next couple of months, I don't think, because as I mentioned before, we'll be up against those huge months from last year. So the press are going to be reporting, big drops in sales prices, I would think, unless something equally crazy happens this year. But what does this all mean? Lots of inventory, consumer confidence down. Well, right now, there's really two markets. So we've got a lot of people who are still kind of priced at very premium prices. And then we've got a small amount of the market, which is priced at current market. And we're still seeing, in some cases, multiple offers. Those homes are selling fast and they are moving. And so while it is technically a buyer's market, if that doesn't change and people's expectations don't get aligned to a larger degree, I still think we're going to see low sales, and we're going to see every now and again fighting over properties. That's unfortunately just the way things are. So what does all this mean? Well, it really depends on what you're trying to do. I mean, if you're buying a property for cash and you're currently renting, I would personally wait till March. If you are getting a mortgage, a larger mortgage, you got to take a look. Our interest rate's going to rise. Properties probably will soften. So that's kind of a balancing act. If you're buying and selling in the same market, unless you're making a substantial move up, it probably doesn't make a difference. And if you are downsizing, probably the quicker you sell, the better. Would be my advice. So I will put a caveat on that, in that the market has defied all logic for the last 2 years, and it's going to be interesting to see what happens coming out of the gate this year. I will keep you informed. And for those of you I haven't seen recently, have an absolutely fantastic 2023. Take care. Bye bye.